in partnership with CommSec.
Alrighty, a very good morning, Tom Piotrowski. How are our numbers looking today, Tom?
Pete, the futures are pointing to only a modest gain when you consider the emphatic response that we saw on Wall Street to the latest inflation figures. So SPY futures are up by 0.25%, but compare that to the Nasdaq, say, for example, which was up by 1.4%. You had the Dow and the S&P 500 each up by 1.1%. So quite strident improvements, and this was a response to the latest inflation figures. The July Consumer Price Index in the United States was in line with the market's expectations. So that has, I suppose, resolved the belief on the part of investors that the US Fed will be cutting interest rates in September, a 90% probability in terms of the pricing at the moment. But the point that you'd make out, Pete, is that whilst these numbers were in line with the market's expectations, there has been a steady increase in the underlying rate of inflation, for example. So that's what the US Fed looks at most closely. And this saw its sharpest increase, notwithstanding being in line with expectations in about 6 months, at 3.1%. It's not the sort of level that is going to give immense comfort to a central bank. So an interesting dynamic playing out between the share market and the interest rate markets at the moment. Interest rate markets weren't vastly moved last night on the back of this. 2-year government bonds were down slightly. They're the ones that are more sensitive to interest rate expectations at around 3.74. So that was down 2 basis points. A 10-year Treasury note actually rose by 2 basis points to 4.29. Elsewhere, as far as the local picture is concerned, it's a very big day as far as company earnings are concerned. We'll have the CBA reporting results, Computershare, Evolution, IAG, SEEK, Treasury Wine Estates and AGL. We will be amongst the organisations reporting numbers. The US dollar fell on the back of those inflation numbers, and that's pushed the Aussie dollar back to 65.3 US cents.
Good stuff, Tom Piotrowski. Thank you.